Hello, welcome to the weekend market review. It is Sunday, September 3rd, 2023. Happy Labor Day weekend. Market is not open tomorrow, but let's get right into it. Okay, I got the VIX here. We are near 52-week low. It's getting very dicey. Okay, the market is entering into danger zone, so be very careful. What a precipitous drop. Look at this precipitous drop that we had back in May. Okay, so that was pretty ugly. And once again, we are near this. I would not be surprised if we will touch below 13 on Tuesday at the open. Would not be a surprise at all. At that point, the old saying, if protection is cheap, buy some, right? That's the slogan. Let's go back 3 years to show. Look at that. That's pretty crazy, right? There was time where last year, this was a line in the sand. And then this year, the line in the sand moved to a lower level. And if we go back, let's say go back 10 years. Okay, this is the norm, right? This is basically what would be the low level as far as, if you go back to 10, 15, 20 years. Okay, so it is back there. So be very careful, be mindful. We're entering into the tough time of the year of the market as well. I think tax loss selling can happen with any stock between now and the end of October, because if you are a big fund with a big gain, and you know the tax loss selling is in October for a lot of people, why not front run, right? So it can happen at any time. Who knows what the big boys are doing. I'm not surprised. I would not be surprised if there are specific sectors that are already in the tax loss selling mode, and I will go into that later as I highlight some stock. But for me, right now, I might even go out there and buy some VIX call going out in October and November. A little gamble, throw $100 into a VIX call. Going out in October, where maybe 16-ish, right? That will be a nice 25% kind of return going out in October. Yeah, maybe. Okay, maybe. Most likely, if the VIX hit the 52-week low on Tuesday or during the week. All right, let's take a look at TLT. We are back. I'm glad I closed out my 95 spread Friday. This coming Friday, September 8th. On this move up here, I advise people to sell cover calls if you can. Where 98 and above, right? That's the spot, because you have the gap fill here. You get a gap fill at 97.93 and another gap fill at 99.61. So sure, it would be nice if there was premium for calls at 100, but that was not much unless you want to go out into October. Okay, but on this move here, I closed out my 95 put spread. Those 95 put spread was sold back here. Back here, when TLT dumped from the 98 level down, I sold a lot of 95, 94, 93, 92, 91.5 spread going out from that week all the way out to October as I roll my spread that was losing here into the next 3 months. Okay, so but I took this move to close it out. So now, between now and October, I have no more spreads 95 and above. They're all gone. and I sold some 93.90 spread short term. I've been doing that for the last couple of weeks. I have, I sold on weakness. I sold 93, 90, sometimes even 92, 89. Yeah, so I did that. I saw a handful of 93, 90 on Friday. And I think we're going to trade in this sideways tight range for a while. It could be over. It's all data dependent, okay, on economic data. The economic data that came out last week, for the most part, was good as far as weaker job data, weaker wage growth data. There was some strength in some area, but I think in general, I like the data. Does that mean the power's gonna stop? I don't think so. But I'm confident in selling 93, 90 spread here. It has been a month since we had this big crash, and the last time we had this big crash down, it's roughly okay. Last time, if you take a look at the breakdown, right? Last time you can count on this day right here, which is 10/18. A month later, 11/18, 11/16. We already moved past. Okay, so it was a month that is gone back. Okay, so now you look at this. You can count this as the beginning of the breakdown. Yeah, 8/1. Okay, so we are there. We are behind schedule as far as my expect. When this happened back in August 1st, I thought to myself, in a month by Labor Day, we'll be back. But I was wrong. Okay, I thought for sure a month later we would come back to the 98 level. But for now, at least we came off. Okay, for sure, it came down further than I thought. If you tell me on this day, on August 1st, that we're gonna go all the way down to 92-ish, I would say no way. I would have thought that we would have stopped somewhere like in the 95 level, but nope. So it went further than I thought, and it take longer than I thought, right? So it is what it is. DIA. Risk reward kind of meh right now. So sure, was buying a DIA on the channel low a smart idea, or at the 100 MA? Yeah, if you did, congratulations. But right now, you're kind of in the middle of no man's land, right? The risk reward is kind of basically even Steven as far as the upside to the upside of the channel and the downside of the channel. So stay away. Trade the channel if you can. QQQ. Same thing here, okay? If you look, sure, it did not get to the bottom of the channel. That would have been sweet, right? I think a lot of people was hoping for the channel low because it was running along the 100 MA. That would have been a great buy, but it did not get there. So no man's land here, okay? Basically, the risk reward is right in the middle, upside, downside, so stay away. SPY. Similar, okay? Similar. We're nowhere near the channel low, but right now the upside is actually more risky compared to the QQQ. So I think SPY is the least attractive of the three major indices as far as DIA and QQQ. But I would be buying into this, okay? If anything, if you have any long in DIA, QQQ, SPY, be mindful to raise your stop, right? At the minimum, use either the 50 or the 20 MA as your stop in case we have a pullback. It is September. Tax loss selling is here. The season is here. All right, let's take a look at some ugly move on ELV. That was ugly. I had some spread. Thankfully, it well, I sold some spread. Start out at 4 before this dump. Okay, during the week before this dump, I had 445, 440. On this dump, I sold 442.5, 440, as well as 435 spread. So what did I do on Friday? On the initial move, okay, let me show you. On the initial pop, and I mentioned this in the chat group, I said that if there is a pop early, I will close out the 445 spread, which I did. I closed out the 445 and the 442 spread. The 445 spread was a small loss. The 442.5 spread was a small gain. And then I let the 440, 437, and 435 spread expire. So net it was a win, but it was dicey. And I'm glad I closed out those early spread in the first 30 minutes, because if I did not close the spread, I would have been a big loss. Okay, because I had 4 spread that I closed and 6 spread that make money. But if I didn't do that, the 445 spread would have wiped out all the gains. All right, so yeah, I'm glad I did that. So that was ELV. All the healthcare got the ugly stick. Okay, so let me go 1 year. They do move very quickly. For those that follow this sector, they move violently and quickly. Look, okay, when a down move happens, it's violent, and it's usually happen like in a week. It can last a little bit longer, but the move can be extremely violent, and the move up can also be very violent. So if this move over, I don't know. What I do know is I have some spread for next week. I did sell some, which I sold some 435 spread for next Friday. Okay, and I'm ready on any pop high on ELV. Okay, I would close them out. Sure, it's 442 now, but like I said, it can move violently, like 10% move. So can we go from 440s? Well, the move is from 450 something, right? It was in the 450s, 460-ish. So a 10% move, yeah, we can come down here in a hurry. Can we close the gap? Anything is possible. Okay, I don't rule out a gap fill here. So that's a long way from 435 to 420. So yeah, you betcha. If there is any kind of move up on Tuesday or Wednesday, I will be closing out those 435 spread with a small gain and be happy about it and look for something lower. If I was going to sell another spread, it would have to be at least at the highest 425, 420. I would not mind buying the share outright down here. Okay, but that's where I would be. Humana, close the gap and bounce. Okay, look, it closed the gap. Of course, it overshoot the gap, right? The gap was right here, so it overshoot. That was ugly, and then it bounced. But it settled right at the 50 MA. So I would, if the entire sector get the ugly stick again this week for Humana, if you're gonna play the put spread game, do a 443. Well, use 443 as your protection. Okay, that's a gap, the other gap fill. So if I was to sell Humana spread, I would do 425, 420. Okay, because then you have 2 gap fill to protection, right? Yeah, you have all kind of protection down here, and I would not mind owning 100 share outright as well down here for Humana. Okay, so if you're gonna sell using 425, 420, okay, if you sell 425, 420, and get 50 cents credit, I would mind owning the share outright down here. That would be sweet. So I welcome the big move down if it happened. Cigna hold up a little bit better, but it's a no touch for me. Okay, it's no touch because I think it won't take much for Cigna to violate the 100 MA and test the ref low. Okay, this zone right here for Cigna. There's a zone. Okay, let me draw in that zone. The range. I always talk about range. Okay. Look, support, resistant, 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 breakout, check back, support. Okay, so that's zone. So don't use the 100 MA as your protection. To me, I'm gonna put an alert right there. Below, break, sell spread, low, question mark. Okay, because if I get that signal, then I will look to sell spread where? Below this zone, unless I want to own the share, right? But more likely I want to sell below. I'm going to use this zone right here as the protection. I trim more LLY. Eli Lilly, I did. I trim. I've been trimming, and I start to trim, well, I trim share that I bought on a dip, and on Friday, I finally start to sell share that I have been holding since this move. Okay, on this move, I trim a lot, and then I hold on to all the share since then, and then I bought some on a dip here and there, and I've been trimming, but I finally sold a little bit of what I've been holding on this point because it was at the all-time high. Yes, I sold near the all-time high, and I'm happy to trim some. Getting very high, very high. Pfizer still going sideways. Like I said, nothing here to talk about, nothing to sell, nothing to buy. No doubt the 50 has been a suppressor, and now the 50 and the 20 is once again together like it was back here, right? Like I said, I don't look at the moving average here with any kind of like worry. To me, it's gonna go sideways for a while. It might go sideways for the rest of the next month. And I'm talking about tax loss selling. Yeah, isn't this one of the good candidate for tax loss selling with the way the chart looked for the past 9 months? Yeah, practically anyone that bought into this stock the past year is down, right? So if you bought and hold, you down. If you trade, you down. So yes, this is one of those where I'm just like, there's no reason to add to this because it could be tax loss pressure selling for the next 6 weeks or longer, right? So no need to do anything there. JSK, better, but it's at a zone where it's not worth buying or selling. Okay, I have sell order up here. Anywhere above 36, I will start trimming, right? But for now, nothing. I have not add in over a month. The last time I add was down here. J&J, yeah, I sell put spread. It filled the gap. Okay, look, it filled the gap. Where did I sell put spread? 155, 150. Okay. I like it. I like J&J here. Like I said, I don't mind owning the share outright. I even sold 157.5, 152.5. I sold a couple spread. I like it here. I like the risk reward here. But if they choose for 155, 150, yeah, I would look to sell long dated options as well. If there is juice for 150, 145, way out into October, November, I would too. Yeah, I like the risk reward here for J&J. It's a very volatile stock, surprisingly. Um, FV, it's kind of like no man's land. Would I buy FV? I would, but down here, okay, I have a alert here at 144.2. So when that alert go off, then I will pay attention to my buy order at 144 and below, right? Yeah, I'm ready to buy at the 50 MA and below, and perhaps sell spread down here into the mid 130s. Okay, but patient, patient. I'm watching BIIB, still nothing there. Gilead, same thing, nothing there. I did trim a good chunk of ALNY. Yeah, we talked about that, right? I had my I had trim order. Well, I start to trim here, and then I had order in at 195 something, right? And then I had order in at 200, and of course 205. It didn't get there. It was very close, but yes, I had an order in right up there to trim the rest. It was a nice run. My average was my average cost was like 184-ish. Okay, I start to buy here on this day. I start to buy, okay, and then I average down, and it was a nice move. No complaint here. XBI, I sold a lot of put spread. Well, not a lot, 2 or 3 here and there. Will expire. I sold long dated put spread way down here, going out to October. So yeah, way down here. Okay, below 75. But if you have it, I would say look to sell 81 and above. Okay, for sure between 81 and 83. That's the area where you should trim some, right? If it can break that, yeah, can it run? Sure. Okay, play the range. Play the range. Alrighty, let's take a look at some discretionary. Pepsi, wow, ugly move. Okay, I add some. I sold some put spread too. For sure, I did not like the action, but it is what it is. Would I add more? I have the put spread at 175 and 172. Would I buy 100 share outright at 175 and below? Let the put spread assign? Yes. Can we, how low can it go? I think we can see 173-ish. It might get there. It could be a channel, okay? I haven't changed the color yet, but I put this on during the week because there's a downtrend here, and if I duplicate that into a channel using this point right here, then perhaps it could be a down channel, right? So we'll see. But it's I like Pepsi. I'm not, like I said, I trade Pepsi enough that I don't mind owning it here. It's one of those stock where, yeah, if buying 175 share, well, if buying 100 share at 175, can it go lower? Sure. Can it get as low as 169? Yeah. Okay. But it's a lot better owning it down here than in the 190s. Okay, so just be patient. You make money. It's Pepsi. Coca-Cola, yes, I did buy. I had alert set in below 60, and I bought a little bit on Thursday when it first violated this a little bit, and I bought a lot more Friday. Okay, so I had bought back all the share that I sold up here. Okay, I bought a bunch here, I sold a lot there, and I bought them back here. So yeah, I'm back on Coke. Okay, McDonald's, same thing. I'm adding. Okay, in this gray zone, I did trim on this move. I did trim, and then I add back. Okay, I add back more. Don't have a lot. Okay, I don't have a lot of McDonald's, but I have more here than here because when I trim up there, I bought back and more here. So I like it. Now let's talk about some. Okay, Mondelez also took a beating. Okay, but I think Mondelez potentially this could be the channel here. Okay, let's change the color. Let's change the color. Make that a channel. Okay. Make that a channel. Let's see. So I did not buy any. Okay, I did not buy any because when I was put on this channel during the week, I'm like, huh, it might violate the 200 MA, and sure, it sure did. But it's at that point where I was too busy buying Pepsi and Coke. But um, let me give you my reason why I did not buy Mondelez. Okay, so let me pan this out. Okay, there's another channel. There's an up channel here. Let's make that a channel color. And make this into my channel color so that, okay, if there is a violation of that channel, I think we can hit 68 ish, okay, mid 68, and I think that's where I would buy. Okay, I would buy there because I think that's a better spot. Now Mondelez, for those that don't know, has something very similar with another stock that I bought on the dip during this week, which I didn't buy a lot. I bought 5 shares. Okay, it's not like I'm not all that bullish on this sector, the food sector. Why? Tax loss. Okay, tax loss. I'm not going to jump out and be so early because we can be faced with 4 to 6 to 7 to 8 weeks of tax loss selling. Okay, so there's no reason, but it is at a key support area. Okay, let me once again let me do a zone play. Now, what is the common thing that Hershey and Mondelez have that I will discuss? This is why I bought into Hershey, and I also sell put spread going out, into October and November. Of course, my put spread is below, okay, 210, 205, 210, 200. Hershey and Mondelez share one ingredient that is hitting record high: cocoa. Okay, this move here is about cocoa. Okay, if you look at cocoa, I wonder if I can look at the chart. I know, can I look at cocoa future? Is there any way for me to look at cocoa future? Okay, I'm not sure how represent this is, but take a look at this cocoa. Okay, it's ugly. Okay, cocoa is high. Okay, it's danger zone. Okay, it's not when your key ingredient is rocking like this, it's gonna squeeze on your margin. Okay, so it's not good. It's not good for the producer like Mondelez use a lot of cocoa. They're big on chocolate. Of course, Hershey is mostly chocolate, right? So yeah, so that's the reason why um, I bought a little Hershey for long term. And like any commodity, okay, this is the thing. Like any commodity, they will come down. They move up and down. It's seasonal, okay? Cocoa is high. Why? Bad weather. Cocoa crops bad. Okay, it happens. We heard this with from avocado, with Chipotle raising price to Starbucks raising price on coffee. They all move up and down. Okay, so if you have a long-term view, cocoa price will come down, and Hershey Mondelez margin will expand greatly because when they're not cutting prices, Hershey is not going to cut prices. But when price come down and input costs come down, 3 months, 6 months, they will have fat margin. So if you have a 6 months horizon on something like Hershey, I think you will have a wonderful, wonderful return 6 months down the road. So it's time, no rush. Now, I also bought a little bit of General Mills, Kraft Heinz, you name it. I bought a basket of them, a basket, small. I bought anywhere from 5 to 10 shares, not a lot, but they are taking a beating. So, can this be tax loss selling? Absolutely. Okay, you're talking about every single person that bought into General Mills in the past year is negative tax loss. Okay, so yeah, KXC, same thing. Okay, they all at the level where if you have 3 months or longer horizon, buy some. I did. At least I don't look at if I buy some here like I did, I plan to add slowly in the next 2 months because I do think tax loss selling is going to put a lid on many of these stocks. There's no need to jump in there and buy 100 share of Kraft Heinz. There's no need to. You're gonna get plenty of chances to buy at the same price next week, next month. Okay, in my opinion, there is. I don't see a reason for them to pop now. You know, unless something crazy happened with the rest of the market, I don't know. I just know that right now I don't see a reason. Let's talk about banks. KRE. I'm surprised. You know, with TLT move, I'm super surprised that KRE is doing this, especially Friday, right? Well, I'm surprised because TLT went down Friday with economic news that favor a slowdown. So KRE act more rational compared to TLT, but there's no need to chase it here. Okay, there's no need to chase it here. Okay, I've been selling put spread 42, 39. I sell put spread all the way out to October. Okay, no worry. Okay, I have my share exposure. I'm not adding to it. So for me, would I buy the share outright if it come down? Yeah, but for me right now, right here, no. Bank of America, same thing, right? Plenty of tax loss selling here. If you want to buy in this zone, the gray zone, yeah, no need to. Okay, I have no need to. I have yet to buy back what I got stopped out up here. So I'm fine not adding for now. Now I did look to trim Goldman Sachs. Of course, I bought Goldman Sachs down here, right? I was looking to sell up here, 335. It never got there. that's okay. I'm fine holding it here. On any pullback, I would sell put spread and buy some share. But yeah, I like Goldman Sachs here. Not enough to add, but Schwab, that was a buy here. It's a trim here, right? So if you trade, hopefully you trim here. You had to. Okay, that's a must. Um, would you buy? Would I buy down here again? Yeah, but I would rather sell put spread. Okay, where? Do a 55-50. Okay, down here. I would rather do that, and I would mind owning 100 share of Charles Schwab outright down here. Okay. Okay, so that's Morgan Stanley. Same thing, very similar chart to Goldman Sachs. Okay, yeah, it's at the spot now where I wouldn't buy any. Um, if you have it, maybe you look to trim into 87, 88, 89-ish, right? But for now, it's not worth adding. Not yet to sell. JPM, not worth buying. Okay, it's to me 144. Okay, ideally I have my alert set here at 143.63 because if I get into the gray zone, I would be buying. Okay, because that is, of course, it was resistant going back 7 months, 8 months. Yeah, there was a 6-month span when it was resistant, and then it's a breakout, right? So I think we'll get there. I think if you're patient enough, you'll get your chance to buy JPM again below 143. Okay, so just be patient. All right, let's move on to FANG. First up, Amazon. What to do here? Definitely not buying. Trim you must. Raise your stop you must. Okay, raise your stop. If there is an up opening on Tuesday, I would use at the minimum use a 20 MA as your stop. You can always use a 20 MA as your stop and put in a buy order at the 50 MA. Okay, so trim, add, trim, add. Okay, that's what I would do. Apple, it can run. It can run a little bit more. The new iPhone is coming out September 12th. So can it fill the gap up here? Yeah. Should you trim at 191? I have my order in. Okay, I bought a few Apple on this move here. As low as 175 was my lowest order. And would I trim at 191? Yeah. Yes, absolutely. It'd be silly not to. Okay, silly not to. Google, strongest of the bunch, but it's at the zone where I say it's time to go. Okay, I think it's time to go. If you didn't sell here, hopefully you're smart enough to put in a sell order up here too. But if you didn't, I would say put in an order to sell at 138 again. Okay, because I think we're at the top range. It's time to go. Meta, tough spot here for Meta. Okay, tough spot. Would I'm not trimming yet. It's at a tight, very tight, between the 20 and the 50, very tight. Okay, so yeah, it could be a breakout. It could be. Depend on what the market's gonna do. Okay, if we have if the momentum is gonna push big tech higher, then I can see it. And would I trim? Yeah, I would trim for sure. 315, 316-ish, 317, yeah, I would. If there's a breakdown, would I add at 273? Yes. Okay, I would. I'm not sure what that yeah, I'm not even concerned about this alert here. But to me, in fact, I'm gonna move the alert up. Can I move it up? Replace alert. I wanna move it up to 270. 273. Okay. If that alert go off, then I think it's worth adding to Meta. Tesla, it was a sell, right? I talked to people that I trimmed, right? You had to. Would I buy back at 239? Yeah, but until I get there, no need to do anything. Okay, no need to do anything there. Of course, Nvidia. All right, so I trim a lot, and I'm not buying anything. I did not buy anything Thursday or Friday. I have ordered in to buy back what I trim from 463 downward. Okay, so I have buy orders in to buy back the share from 463, basically the low up day on this big pop. Okay, so I have actually no, I take it back. 464 is my highest order, and then I have 464 all the way down to 444. So I have a dollar apart all the way down. Okay, and I even have order down here at 433 at the gap fill, but that's wishful thinking. That's a long ways away. And can it happen? Sure, anything can happen. Okay, but for now, I will be happy to add back the share between 464 and 444. Come on down. I continue to sell spread on Texas Instrument on any kind of weakness down here. Yeah, I like it. I hate it up here, right? For those that follow me, I have do bear put spread on Texas Instrument 4 times, and all 4 times was winners. Okay, so but now I play the bear spread up here. I play the bull spread down here. It's one of the few stocks that I think I do a good job on both sides of the fence. Qualcomm, no, it's a trim. Okay, I wouldn't touch it here. No. MU, definitely not. Okay, definitely not. If you have MU, I would say it's time to go. Okay, look, downtrend. Okay, yeah, it's time to go. Can it get up there to 72-ish? Yeah, I'd rather not be there. Okay, AMD. If you bought down here, the channel low, I should change this channel, the color. I should. It is a channel. Let's make it. Let's be consistent. Okay. Okay, let's see. Alrighty. Okay. Yeah, I liked it. I sold put spread. Right now, I wouldn't touch it. I wouldn't add to it. I definitely would be putting in, if I have any share long, which I don't, I would say use the 50 MA as your trim target. Yeah, you should. How about SMH? SMH, kind of like middle of no man's land, right? Another channel, right? Once again, let's Sometimes I'm lazy. So what happens is when I draw a channel in during the day, I don't bother with the color thing. But now that I have time, might as well put in the effort. Okay, so right now you're in the middle of no man's land, so I don't have anything, nothing there. Alrighty, let's take a look at defense. Lockheed Martin. I saw some put spread early last week on this crazy move here. Don't know what the reason was for Lockheed Martin to go down to 440, 444.49. That was crazy. I sold 435, 430 spread. I even sold 425, 420 spread, expiring this coming Friday on this move. That was crazy. Yeah. I think, well, I appreciate it because it gave me a chance to sell 5 put spread and make some money. Okay, so yeah, it's nothing to hate here, but I'm also mindful that the one thing that can make it move down a lot is of course peace, right? So be mindful. That's why I own share, not a lot. Okay, full disclosure, I have 60 shares of Lockheed Martin, and they are slightly underwater, but it's okay. I don't, the average on those was like 455 ish. I hold them for a long time. I've been trading mostly put spread with Lockheed Martin for the most part. RTX, which I liked, and it's going sideways, and it's even over the 20. Yeah, nice. But to me, it's no rush here. Okay, to me, if you want to add 85-ish, you can. But to me, next earning is what matter. Okay, they need to give us a definitive numbers on what the cost is of repairing all those jet engine, and then you can be moved. But I will look to add. Okay, I've been selling put spread here and there, but I will look to buy the share outright in this range. Now that it's over the 20, I will look to see RTX retest the 20 MA and going sideways for the next 2 or 3 weeks for sure. Okay, for sure, this is another candidate that can face with tax loss selling, right? Because surely a lot of people are down a lot. Okay, so that could be the force. That's one of the key reasons why I have not bought into any yet, outside of playing some put spread, because I do think tax loss selling is going to put a lid on this for a while. Ugly sector, med device, still ugly, right? It is what it is. It filled the gap. Okay, that's how ugly it was. But can it go sideways for a while into the next earning? It can. Okay, not much you can do. It's a good sector to be in, but until money rotate into this, then you get ugly move. Now EW stabilizing. I don't hate it here. I don't hate it here. I don't plan to add to any yet, but I don't hate it here. Okay, at least it has stopped the down move. Okay, I don't hate it here. In fact, all the share that I have is back in the green again. And I would not make the same mistake of not setting a better stop next time. Medtronic, same thing, going sideways until otherwise, until money rotate back into this area. Not much you can do. Okay, doesn't matter what the future is and fundamental is. When money want to go to tech, it gotta flow out of somewhere, and med device was one of them. Speaking of a stock I like, DGX. Okay, I add I add a lot of DGX this week. I like it. I like it down here. Can it break and come down here? If it does, I'm buying a whole lot. I did buy a lot, but nowhere near what I own down here. I own a lot, in the hundreds of shares down here. I think at the one point I had like 300 shares down here. So yeah, I welcome. Right now I have 70 something shares, not even 100 shares yet, but I had none. Okay, I had none up here. So for me to nibble and add 70 something share over the last, I start adding here. Okay, on this move, I add, and then of course I trim. I did trim and add a lot more. Yeah, would I add a whole lot 125 and below? Absolutely. I also bought LH, which I've been follow, right? I talk about LH many times. I talk about how I rather buy DGX, but Thursday and Friday, I said it's time. I start to buy at 211 all the way down to 206 something. Okay, so my average is like 208 something, which I'm pretty happy about. Would I add to LX here? Absolutely, absolutely. Okay, I like LX here. Would I buy down to 200? Yeah, I do. I would, but I have a lot more DGX than LH. I'm just starting to buy LH, so yeah, I like it. I like the risk reward there. Is that everything? Oh, of course. Let's close off with Disney. How bad is this? Okay. Oh my goodness. I had some put spread that I sold 2 weeks ago. 82. The put spread was 82.79. I had 82.79 as well as 81.78, and it was ugly. I'm just like, really? When I sold those put spread 2 weeks ago, 10 days ago, the idea of Disney cratering below 83 was slim. Okay, slim to none, and it did. It did. Okay, I sold it when Disney was up here in the 85 range, right? So I said, oh, if I sell 82, I have some protection. And sure enough, that was ugly. But I figured, oh, I got another week. And sure enough, not so. How ugly was that, right? So that, yeah, not much to say. That was ugly, and it hurt everyone. Okay, the strike is gonna, it's a combination of many things. The strike, the deal with Comcast, all that stuff is ugly. Not much to say there. Okay, so oh, I did buy back into Bros. Yes, I had a naked put, and I'm back. I am back with 100 shares. Okay, I had those. I had 100 shares assigned to me back here, and I got stopped out up there, and now I'm back. And would I add to it? Maybe. I would rather sell 27, 28, 28, 25 put spread kind of thing down here. Yeah, it's like I said, it's a very volatile stock. 100 shares is not a lot of money. I don't mind having 100 shares here, and I will sell on the pop. Okay, so yeah, it's a trading stock. Okay, speaking of coffee, why not Starbucks? All right, Starbucks. I did sell put spread during the week. 96, 93, 95, 93. And I have some of that going into next week as well. No, I like Starbucks here. I think it's having a hard time. I think mainly because of China, right? The weakness in China. As long as there is fear on weakness in China, then you have weakness in Starbucks because that's where the growth is. Okay, let's make it real. Growth is not going to be in the US, it's overseas, mainly China. Speaking of China, let's extend to Melco. I did add on this ugly move. I like Macau. Macau casino, strong number, yeah. Looking good, yeah. I'm not trimming. I'm gonna be stubborn and greedy here. Where I trim up there, 12. Okay. Win. Looking good. Looking good. Looking real good. Okay. For those that bought on this ugly move, congratulations. You had to weather 7-8 days of ugliness, but you are rewarded. I would say look to trim 103 to 105, right? Don't be greedy. Okay. Don't be greedy. Las Vegas Sands, same thing. It came down. If you bought, congratulations. It's time to trim. Where would I trim? 56.6. Between 56.6 and 58. Yeah, I'd be selling. Okay. Can't be too greedy. And that's covered just about everything I can think of. Thank you for watching. Bye-bye. Have a good Labor Day weekend.